back to BlockTV. It's time now for HODL with HEDL, a chance for us to zoom out for a moment and take a wider perspective on some of the heady issues that dominate the crypto markets as a whole. And to guide us on this journey of discovery, we're joined by Bitcoin influencer and thought leader Dan Held, Director of Business Development at Kraken. Dan, thanks so much for being with us.
As always, thank you for having me.
All right, so to kick things off this week, we've just had some recently developing news, a story that's sort of coming through the woodworks at the moment about HBUS, the Huobi US exchange, now Huobi Global having just pushed its US users onto this site, now having closed, saying that they'll cease trading by the 15th of December and kick everyone, all the US users off the site by the end of January, wishing instead to focus on international users. Dan, I mean, we all have known for a long time that the US market is a difficult space for exchanges, but what do you make of this latest move?
Yeah, it's an interesting new development, and there's a lot of different moving pieces that might describe why that happened. I think with HBUS, they weren't getting a ton of traction in the US, so their closure isn't that surprising. I haven't heard of many different, many types of bigger type customers in the US really want to interact with HBUS, and I haven't heard anyone mention it in passing in a very long time. So my assumption is that there just wasn't traction. There could be another narrative as well, which is around regulatory climate. They might be getting wind of more intense US regulator scrutiny and have decided to exit the market as well. So it's a bit subjective. We don't really have the full story, but that's what I would guess.
I wonder just with you quickly, given the success of Huobi in Asia, it's considered one of the largest and most successful exchanges in Asia. The distinction between markets that succeed in Asia and those that succeed in the US, for example, do you think that there's a bit of a sort of a juxtaposed or split market occurring there in terms of the way cryptocurrency users which exchanges they want to use or can access? And do you think that's a problem for the market at all?
Yeah, so this is a classic issue that happens a lot of times with Chinese companies. That they do very well in their native China market, but they struggle to really gain traction outside of it. And I think a lot of that is due to very poor business practices in China. China predominantly is governed and run by the government when it comes to the economic activity in that country. So HBUS and these other Chinese exchanges have semi-monopolistic sort of allowance by the government. We saw this as well when I worked at Uber. Didi Kuwati, the company that we competed with in China, was state sanctioned. So there was no way we were ever going to win. But Didi never scaled outside of China. So they're sort of given an artificial advantage within China, but typically fail when they have to actually compete in the real world.
Yeah, certainly it seems like there are split markets forming. It's certainly one to watch. And with Huobi US going out of the United States, it'll be interesting to see how that does develop and whether that segmentation happens further. But now let's switch tacks and talk about a very interesting story that broke. This is the flash crash of Matic. 70% drop in an incredibly short time frame, caused what it seemed by a cascading effect from FUD concern, rumors being spread around the market. What do you make of this incredible crash, Dan?
Yeah, so this is a prime example of like really illiquid order books. When the order books are really illiquid, when there's a cascading sell, like I think what happened here, is that cascading sell hits stop loss orders, which continue selling pressure into a very thin book, which causes the price to slip enormously, as we saw where Matic, I think, dropped some phenomenal amount of money, dropped some phenomenal percentage in a very short order, I think like 80% or something. So yeah, that's just, I think, a function of both the illiquid coin and, let's put it this way, I'm not sure if Matic is really a top cryptocurrency. So who knows what sort of activities are going on. I'm not saying the company Matic itself or decentralized entity Matic itself did anything, but certainly there was some looks like semi-artificial pumping of that coin going on before the giant drop.
Yeah, certainly. I think if my stats are correct, it was up around 180% in the 2-week period leading up to that distinct drop. But do you think this speaks, I mean, you mentioned illiquid coins and how that can be a concern, but do you think that such a drop like this and such dramatic movements speak to dangers or flaws or, I don't know, I'll leave it to you to characterize, but issues perhaps that exist within some of these altcoins out here in the marketplace that people seem still willing to speculate on?
Yeah, I mean, these are dangerous waters that you're getting into. You aren't, you're not, you're a little minnow in a giant ocean of sharks. So you have to be very, very careful when you go out there and trade, especially with these altcoins that can be easily pushed around. With Bitcoin, it would take billions of dollars to push the price. So it's a lot in terms of, the price being real. There's a lot of volume traded at the current price, which makes Bitcoin's price a bit more sticky. With these altcoins, you've got a wide variety of thinness of order books and lack of venues in which it's traded in, which make it really, really risky as it's kind of that small fish in this giant ocean.
Yeah, that certainly is a big ocean, and one which seems to be getting more crowded by the day. It'll be interesting to see how some of these coins survive should there be a squeeze or a movement of liquidity. But now moving to, I guess, maybe it's a more human story, perhaps, that of the LedgerX founders being pushed out. We're talking about Paul and Juthika Chow, pushed out by the board, put on administrative leave, effective immediately. Not an explicit reason given, but coming in the wake of Paul Chow's Twitter blast, we can say, in which he took on the CFTC in an expletive-laden attack. Dan, what do you make of all this?
Yeah, so Paul and Juthika are very, very intelligent derivatives traders that formerly worked at Goldman, and they've been working on LedgerX for a long time. I assume any sort of action like this must have come out of kind of a really intense debate with, I think Juthika says that it happened without her knowing, but they must have known something was coming. I think this definitely stems from their argument with the CFTC. While they may be right in the long run, it doesn't really matter short term, as they have a company to run, and that company requires approval from this regulatory agency. Even if that regulatory agency is doing things that are illegal, it doesn't matter because the bureaucrat in charge can do whatever they'd like. Later down the road, they might be proven correct, but it'll be too long in terms of the viability of the company. So I think the board essentially decided to do whatever they thought was most prudent for the survivability of the business.
So do you see this story as one more of government bureaucracy taking control of a situation or impacting a situation, or do you see this as a story of corporate governance and making sure at the end of the day that the shareholders are the ones that are best served? How would you characterize this development?
Yeah, that's really hard to weigh in without all the details. I'd say it's probably a mixture of both. I don't think that they would make those allegations lightly. I also don't think it's really in good taste to bring that out on Twitter. That's definitely not going to get you the license that you need, and it's not going to really, further your business along. So, and especially when theirs, I think, was totally predicated on some of these. So I'm not exactly sure, which one is more heavily weighted, but it's definitely a combination of both.
Yeah, certainly there are a lot of factors at play in that story. An interesting one to see how it does develop into the future and what the future of LedgerX does look like. But now speaking of futures, whether error-laden or no, MakerDAO has presented a unique opportunity to one lucky investor out there. Invest just $20 million and you have the potential to make back over $300 million thanks to a flaw in its governance structure. Dan, help us break down this one because it's an interesting story to say the least.
Yeah, I mean, as I've said before, 99% of these dApps really aren't decentralized at all. It's merely a mirage of fundraising with a token. The token provides no utility to the people that bought it, and ultimately the network isn't decentralized in the slightest. MakerDAO is a great example of that, to where MakerDAO has an emergency function to where if some user achieved X amount or collected X amount of Maker, they could push changes that would allow them to essentially take all of Maker's collateral. They implemented a security switch in there, which was around enabling them to shut off the funds from being siphoned away, or the collateral pool from being siphoned away. And it looks like they set the security parameter to 0 seconds. So the MakerDAO org would have 0 seconds in order to react and stop this from happening. There's pros and cons as to why they set it for 0 seconds, but needless to say, it highlights how MakerDAO is very, very much centralized. Under any sort of pressure from any legal system, you could see them easily caving and providing access to the regulators. So really what we've built here with MakerDAO isn't anything decentralized or new at all. It's merely centralization masked with a less competent team.
Right. I mean, and that raises such an interesting point there, because obviously MakerDAO really, credits itself, and the MakerDAO Foundation really credit itself on this, decentralized governance structure, this voting rights element. But the fact that this flaw exists in the system, and those that discovered the flaw say that MakerDAO Foundation has been aware of this flaw for a time. I mean, not to get too conspiratorial here, though, I guess. But Dan, do you see this as an inherent way of the foundation maintaining control under the guise of decentralization? Is that sort of how you characterize it?
Yeah, so I talked to a couple people privately who are very well known in the space on the research side, and they confirmed with me that MakerDAO has known about this issue for a few years. What's really interesting is the language that MakerDAO chose to use in their formal announcement of this change that they implemented per this article. They essentially said that we had known of the flaw before, but due to the article, we've had to push an update to fix it. I think that shows extreme incompetence. This is the fact that you wanted security through obscurity is never how you approach security. And then to recognize that in a blog post was crazy. But furthermore, I think it's kind of this arrogance from a lot of these dApp developers that, how dare you question my dApp? You must be a Bitcoin maximalist if you do. And what was funny is that the Bitcoin maximalists were questioning the decentralized nature of MakerDAO 2 years ago. At least the individuals that I spoke to, who had direct contact with the foundation. And despite that, they were kind of hand-waved aside those concerns. But in reality, there isn't this nice gradient of decentralization. Decentralization is something really, really hard to accomplish. And it has to be state-level censorship resistant at the end of the day. And if it's not that, then it can easily fold to any sort of state-level pressures. And so that's where I think more projects could look about how Bitcoin was created and how it was distributed and how it's preserved its decentralization and aspire to be like that. But instead, you see them kind of hand-waving these concerns around decentralization, and then they claim that Bitcoin maximalists are these gatekeepers of an impossible standard. Well, decentralization is really, really hard. If you want to earn that, you have to take all the necessary steps.
Certainly, whether through design, incompetence, arrogance, whatever it may be, certainly a situation like this does represent a scandalous affair for an organization attempting to strive for a sort of decentralization. As you say there, Dan, it can be easier said than done, and often doesn't live up to lofty goals. Dan Held, I want to thank you so much for helping us to HODL with HEDL again this week. Look forward to continuing conversation into the future. In the meantime, stay with us at blocktv.com for all the latest in news and information. I'm Asher Westrop Evans. Thanks for watching.
For more news and updates, follow us on Twitter.